Alright, so today I'll be doing a trade review on 4th of December yesterday. So I'm just gonna jump right in. At 9:12 New York local time, 9:12, I stated that this is the drawn liquidity, the previous week's low and the BC's high, and in order to look for any buyers I would need the 922 opening price. Okay, so right down here at 9:12, this is where it is. Okay, and eventually it did draw into this area, these two levels here. So as well as there is SMTs on the highs on the higher time frames if you take a look. Okay, and for the projections I used this 15 minutes swing highs and lows, and it was right within this area here. Therefore I was looking for longs, okay, on NASDAQ for some sort of retracements. Okay, and right here, as I've mentioned, I was only interested in longs, and I will break even on this trade here, but I had the previous losing trade I'll show you later. Okay, and then why am I demo balling in such a situation whereby I can trade? Because I was looking to trade on Monday. It's because of this market profile right here. Okay, you can see decoupling in the indices. So this is a low probability condition, and usually in such a condition I would prefer to just tape read or demo trade. Alright, so now at around 10:57 I mentioned that ES has a equal low. Okay, right at 10:57, which would be New York's 9:57. Right, let's take a look at this SMT 9:57. All right, price is right here, ES is right here, Dow Jones is right here, right around this area here, and NASDAQ it's right around this area here. Okay, so what made me change my bias? Instead of looking for longs, I looked for shorts. Okay, if the ES and Dow Jones is going up, you would want to see NASDAQ trend up together as well, but NASDAQ is unwilling to do so. Therefore, I was waiting to see if ES and Dow Jones would want to catch up to NASDAQ. Okay, so there are two scenarios. It's either NASDAQ catches up to both of them, or ES and Dow Jones catching up to NASDAQ. So right at 9:57, it's obviously the price action is obviously pointing to you that Dow Jones and ES is probably going to catch up to NASDAQ, and then they're both going to trade downtrend. And this right here is just a retracements on the higher time frames. Okay, so when you take a look at from 9:30 to 9:57 on ES. Okay, let's take a look at the 5 minutes. Oh no, sorry, 15 minutes. Oops. Okay, it left the lows here, and at 9:30 onwards it traded up into a premium fair value gap relative to this current swing high to swing low dealing range. Okay, and if you take a look at this range here, this is Friday's to Monday's range, okay, inclusive of Sunday, but the whole range, swing high and swing low, it's within Friday. All right, so we are trading into somewhere around the half of the discount range. Okay, it hasn't traded below this discount, this range extreme, but it traded up into all the way if you split this discount range into half, we would be in premium of this discounted range. Okay, so price trade up into this area and then starts to fall, right? And at 9:57 it is this candle right here. This candle right here. So 9:57 we see that, not 9:57 but at 10 a.m. you see that price has closed away from this fair value gap and away from this fair value gap as well. So this looks like a IOFED, okay? And with this tiny little fair value gap, my opinion is that it's going to run the lows, okay? Because we have relative equal lows down here, and at the same time on a 1 minute time frame, let me just cut the time so that it's easier to navigate. Right. So right down here, when this candle closed, it closed within this 5 minutes BC, okay? Right here. Ignore the lines or the annotations for now. Okay, let me just toggle it. Okay, so right here you can see that price traded all the way into this BC, okay? And this candle right here, 10 a.m. candle, even though it displaced away from this BC, it created a CB here. Alright, so this CB with this two up close candles, that is your order block and a fair value gap. Right, so on the 1 minute, and I'm just going to show you my entry. Oops, let me get back those lines here. Right, so on the 1 minute, okay, where is, oh, I can't toggle the trade executions. Okay, I'm gonna exit the replay mode, and then I'm gonna log into the paper trading account. Alright, so there it is. Right, so right here, this right here was my initial entry, right around this level here. Okay, my point was that since price is closing trading below or starting to lean below this BPR, okay, this is a BPR to me because it has utilized this fair value gap to take out short-term swing highs on the way up, right? So this is a significant BPR here, so I have one entry down here and another entry down here when it has closed below this inversion fair value gap, right? This inversion fair value gap was used to send the price lower, and then it was used to send the price higher. So this is a significant inversion fair value gap. But however, as you can see, price went up all the way into this area here, okay, this fair value gap. So I entered a few more positions above, right here and right here. Okay, so these two entries are basically close to that 5 minutes CB. Okay, right here above the 5 minute CB, and right here as well above the 5 minute CB, right? So, and take a look at the time of the entries. Okay, because we have a expansion in Q2, right? So from 9, let's map it up. 9:22 and 9:45. Okay, so Q1 expansion, Q2 expansion. Okay, and look at where the true open is at 9:22. It's right here. Okay, above 9:22. This is 9:22. Okay, this is the true open of the micro session. So price was trading above the true open, and my entries are all above the true open, which qualifies it as a short. Okay, so you can see that expansion here and then expansion here. So Q3 is probably going to be some sort of a consolidation. So we get that retracement and then some consolidation right here, and then Q4 would be the highest probability, because as I've shown from many examples previously, if you have an expansion in Q2, expansion profile in Q2, the best next quarter to trade would be Q4, right? So as you can see right here, this entry was the best entry that you could ever have, right? And then the price just gravitates down into that equal low down here. Okay, so I piled up my orders on the way up and then waited for this equal lows down here, right? And I've mentioned that it needs to attack the low by 10:30, okay, because that would be the end of the quarter, and it did so perfectly. Okay, and then when you look at how it utilizes this IFVG, it's pretty clean here. Okay, so this right here validates that it's going to run below, and it's basically just trading above the true opens for further accumulation. So right here, how could you have entered, let's say if this was left open? Okay, so the probability of this as a breakaway gap, it's very high when it takes out the swing low here, and then it has traded below this inversion fair value gap, and at the same time it has a implied fair value gap. So what is an implied fair value gap? When you look at this swing low, you map out which candle took out this swing low. So it was this down close candle. Okay, so what do when this down close candle doesn't form a fair value gap, but instead you get wicks beside the candles? You can use the 50% of the wick and the 50% of the wick. So between these two 50%, this is your inversion, this is your implied fair value gap. ICT taught this, okay? You just have to look back through his 2023 mentorship. He taught this implied fair value gap, okay? Right here, as you can see, this candle's high, right? Take a look at the high here, okay? The value here. This candle's high comes in at 4568.75, right at this midpoint of this wick here, okay? And you can see the subsequent candles basically traded up into this fair value gap. So let me just map it out for you right here. Okay, this is your implied fair value gap, and then you can see subsequent candles trading up into it and then rejects aggressively away from it, okay, with the confluence of this inversion fair value gap as well. So this is very beautiful price action down here. So eventually this was my demo trade. Okay, for NASDAQ, the difference is that because I was trying to prove that entries before 9:45 are always low probabilities for me, okay, because I'm not very well versed in trading the manipulation phase in the AM session. So right here, as you can see, all the executions are in Q2, okay, all in Q2. And because Q2 was in a, you would call this a consolidation, but it's probably a seek and destroy profile. Okay, so same thing here with NASDAQ. Since it gave a seek and destroy profile right here, Q3 it's probably not going to be any good for executions, and you are better off waiting for Q4. So what happens in Q4 in Nasdaq? Okay, so you have this BPR right here. Okay, so why is this a BPR? Because price utilized this area here, okay, to send the price higher, right? And when price does this and it comes down and trades below this BC, okay, you would use this as a BC right here. So you have another level that you need to mark. Okay, this BC and this BC, right? So Nasdaq basically is trading in a very deep discount, right? As you can see the true opening price right here, we are way below the true opening price, right? But you can lean on to the knowledge of ES wanting to trade to its equal lows. You can use that as the draw on liquidity, and then you would expect Nasdaq to follow through because Nasdaq has been reluctant to go higher, so which means it's the most bearish asset among the three indices. Okay, so right here you are using this BPR as your gauging of strength, and you're using this BC as your entry. Okay, so in Q4, this right here, once this candle closes below this BC, you can enter a trade down here. Okay, once it tags into this BC, you short, and then you look for, what do you look for? This high to this low. Okay, you look for 2. Pretty simple, right? If it is going to be a low resistance liquidity run, you're going to look for 2, right? But if you're using days quarterly theory, you're probably going to exit right around this candle here, because we are nearing the end of the Q4. Okay, you do not want to hold any trades beyond Q4 if you're using days quarterly theory. So you can line up your expectations and then see if it's going to pan out in your direction. It takes a lot of practicing before you can trust this projection, and as well as the timing factor. Okay, so right here, as you can see, even though there are fair value gaps, price didn't really trade back into it because NQ was very bearish. Okay, and yeah, I hope it answers most of your questions as to how you could have traded NQ, or you could use ES as your entry. Okay, ICT taught this before as well. So let's just say you are expecting ES to take out the equal lows. Okay, and then you see that ES is trading up into this 5 minutes CB right here. Okay, right here, NQ was down here. Okay, it has already made 2 down close candles within this BC here. Okay, 2 down close candles closing within this BC right here. This is not something you want to see if your setup is high probability. Alright, so any trade up above, right down here, any candles trading up, you could have shorted the candle based on ES. So you can enter the short here, okay, this candle here, and then if you're using days quarterly theory, you can short in this time frame, and then this candle here, as it trades up above or trades back up into that 5 minutes CB, basically only there's 1, 2, 3, 4 candles. So you can use this entry down here, shorts, and then you look, and then you take profits right around the same time as as ES takes out its equal low, which would be this candle down here. Okay, that is possible as well, right? And yep, this will be the end of the trade review. So right down here, let me just take a look. Alright, I've went through what I've mentioned down here. So thanks for watching, and I hope you find this review helpful or interesting. Right, basically what I've applied are from the people that I've learned. I've mentioned them. The projections are from the projections here using the fibs are from Trader Dexter, right? You can look him up on Twitter. Yep, hits and the quarterly theory here, it's from Trader Day, and obviously the main framework and the main base of all this entire concept, that would be from ICT, the man himself. Okay, so thanks for watching and have a great day.